I'm involved in the stock market, which is fun and, sometimes, very painful. I studied economics and thought I wanted to play with the stock market. My dad was a financial advisor, and I was going to go down that path. I was an intern at Smith Barney. Stock market corrections, although painful at the time, are actually a very healthy part of the whole mechanism, because there are always speculative excesses that develop, particularly during the long bull market. If you have a company called X and today you feel the price is very high, next year it could perform very well but the price may not perform. So in the stock market what happens is buy on the rumor, sell on the news. With the possible exception of things like box scores, race results, and stock market tabulations, there is no such thing as objective journalism. The phrase itself is a pompous contradiction in terms. You get recessions, you have stock market declines. If you don't understand that's going to happen, then you're not ready, you won't do well in the markets. My father was a person who always allowed me to do what I wanted, but he told me you want to go to a stock market, first get yourself qualified. So, I qualified myself as a chartered accountant and my dad said, "What do you want to do?" I said I want to go to the stock market. He asked, "What will you do?" I said I invest. The stock market can be down, but the stock market is not an indication of where people's spirits and enthusiasm are, and where their intellectual energy is. Anybody who plays the stock market not as an insider is like a man buying cows in the moonlight. For those of us in the financial world, Black Friday has a strong negative connotation, referring to a stock market catastrophe. The stock market is an exploitable market where being right means you get rich and you help the overall system error correct, which makes it harder to be right. The mechanism pushes prices close to random. They're not quite random, but few can exploit the non-randomness. The studio system reminds me of the stock market. While thousands of Americans die alone, Donald touts stock market gains. As my father lay dying alone, Donald went to the movies. If he can in any way profit from your death, he'll facilitate it, and then he'll ignore the fact that you died. When Trump was a candidate, he talked about the stock market, because, the stock market was going up when Obama was president. I told my father I wanted to go to the stock market. My father reacted by telling me not to ask him or any of his friends for money. He, however, told me that I could live in the house in Mumbai and that if I did not do well in the market I could always earn my livelihood as chartered accountant. This sense of security really drove me in life. Big money is made in the stock market by being on the right side of the major moves. The idea is to get in harmony with the market. It's suicidal to fight trends. They have a higher probability of continuing than not. I think that stocks have been this tremendous equalizer for people in this country. Guys who can't make a lot of money at their jobs have been able to make a lot of money in the stock market. I hate weekends because there is no stock market. Stock market goes up or down, and you can't adjust your portfolio based on the whims of the market. So you have to have a strategy in a position and stay true to that strategy and not pay attention to noise that could surround any particular investment. I used to go to Vegas and play the horses, and then I realized how ridiculous that was. There is no winning in gambling, but there is on the stock market. The stock market is a giant distraction from the business of investing. The arts are an even better barometer of what is happening in our world than the stock market or the debates in Congress. All my money is in a savings account. My dad has explained the stock market to me maybe 75 times. I still don't understand it. Technology investment drove growth in the 1990s, both directly and by fueling a rising stock market that led to increased consumer spending. I decided that the stock market was not an option for IKEA. I knew that only a long-term perspective could secure our growth plans, and I didn't want IKEA to become dependent on financial institutions. I found the stock market very intriguing because prices used to fluctuate. I used to wonder why the price fluctuates. Part of my advantage is that my strength is economic forecasting, but that only works in free markets, when markets are smarter than people. That's how I started. I watched the stock market, how equities reacted to change in levels of economic activity, and I could understand how price signals worked and how to forecast them. I never attempt to make money on the stock market. I buy on the assumption that they could close the market the next day and not reopen it for 5 years. We have this culture of financialization. People think they need to make money with their savings rather with their own business. So you end up with dentists who are more traders than dentists. A dentist should drill teeth and use whatever he does in the stock market for entertainment. Anyone who thinks there's safety in numbers hasn't looked at the stock market pages. Even from the very beginning, I didn't put any money in the stock market. And at a relatively early age, 10 or so, I invested my first share of stock, and I used to follow, look at companies and so forth. But throughout the whole period, and indeed right through my college years, while I was involved in the stock market, always interested in finance, I never thought of it as a full-time job. An interesting thing happened in 1989, right as I was graduating. The stock market crashed and really changed the landscape of the art world in New York. It made the kind of work I was doing interesting to galleries that wouldn't have normally been interested in it. When the stock market crashed, Franklin Roosevelt got on the television and didn't just talk about the princes of greed. He said, "Look, here's what happened. I am very concerned about the millions of baby boomers who are counting on the stock market to deliver them a safe, sound, long retirement. I am afraid the baby boomers who are counting on the stock market are in trouble." I didn't go to business school, didn't care about financial stuff and the stock market. Stock market bubbles don't grow out of thin air. They have a solid basis in reality, but reality as distorted by a misconception. I am not in the stock market. I am beholden to no one in what I do. If I spend billions on a fashion show, I spend billions. It's not public. And if I am in the stock market, I am obligated to account for things, and to show what the business is doing. When my book Rich Dad's Prophecy was released in 2002, most financial newspapers and magazines trashed it because I discussed a looming stock market crash. There is a disconnect between the performance in stock market and the performance in many companies. I just like to keep my money in the bank. I'm not a big risk taker. I don't know anything about the stock market. I stay away from things I don't know anything about. We had a booming stock market in 1929 and then went into the world's greatest depression. We have a booming stock market in 1999. Will the bubble somehow burst, and then we enter depression? Well, some things are not different. History proves that a smart central bank can protect the economy and the financial sector from the nastier side effects of a stock market collapse. First, his job approval ratings have been trending down for many months, a trend that has accelerated in recent weeks as the war on terrorism has been supplanted in the public's mind by corporate scandals, stock market declines, and a growing sense of economic insecurity. The stock market crash in October 1929 didn't destroy a particularly large amount of wealth or make people highly pessimistic. Rather, it made companies and consumers very unsure about future income, and so led them to stop spending as they waited for more information. After 1929, so many people had been traumatized by the stock market crash that there was a lost generation. When it comes to portfolios, my personal advice is for anyone who can, put money into forestry or farmland. Long term, you would probably never come near their returns in the stock market. In the world that I see, land is golden. Nothing is simpler than owning the stock market and holding it forever, and that's essentially the idea behind the index fund. Smoot and Hawley ginned up the Tariff Act of 1930 to get America back to work after the stock market crash of '29. Instead, it destroyed trade so effectively that by 1932, American exports to Europe were just a third of what they had been in 1929. World trade fell two-thirds as other nations retaliated. Jobs evaporated. If stock market experts were so expert, they would be buying stock, not selling advice. Visit our website for more quotes, quoting.com.